I'm Tom Thornton with Hedge Fund Telemetry, and welcome on here the second to last day of the year. I'm joined with Geoff Garbacz, a very good friend of mine over the last 20-something plus years. He's with Erlanger Research and Quantitative Partners, and Geoff is by far the go-to person for short interest and how to interpret short interest properly and how to use it in your trading. So before we get started, I've got to read the disclaimer. There is risk in trading markets, as we all know. Hedge Fund Telemetry's reports and webinars are based on information gathered from various sources and believed to be reliable, but are not guaranteed as to the accuracy and completeness. The information is subject to change without notice, and Hedge Fund Telemetry has no obligation to provide any updates or changes. Hedge Fund Telemetry is providing this data for informational and educational purposes and does not believe that it is a sufficient to base an investment decision on. The information should not be regarded as a solicitation or recommendation of any particular security or to engage in any trading strategy. One should always check with your licensed financial advisor to determine suitability of investments. Yes.
Okay, great. Okay, so there's two things that we like to do when we look at a stock. The first thing is to determine how heavy or light the short selling is. And then the second thing we do is we build a technical rank, and we rank all stocks from 10% to 100 in 10% increments. And the way we do that, just to show everyone, we use this technique right here. It's called Cohen layer mapping, which is like bar coding. And the whole idea is to rank stocks from 10% to 100% on the relative strength against the S&P 500. So if it's got a rank of 10, it means it's underperforming. And if it's got a rank of 100, it means it's outperforming. And we look at how it's doing over the last 100 trading days. And so if it's tracking the S&P, it's going to have a rank of 50. And so let's just take a simple idea. Let's say we had 5,000 stocks in our universe. What we do not do is we don't throw 500 stocks into each of these 10 categories. So if the technicals are really struggling, we could have 3,500 stocks in these 5 categories, and we could have only 1,500 in this category. So it's a great way to look at how stocks are doing technically. And so then what we do on short interest is the same thing. I'm going to actually go back now to the chart room, and we're going to take a look and see how we build a short intensity level.
But one thing before you do it, just go through the type 1, type 2, type 3, type 4, and basically what they represent, and because I think that's going to be important for people.
Sure. Okay, so going back to this, there's 4 types that we like to track. First thing is a short squeeze. It's doing well technically, and it's heavily shorted. And we'll get to how we track short interest in a second. A type 2 is doing well, but no one is short. So in other words, if it's going to go up, it's going to go up because people are buying the stock, not because people are covering a short position. A type 3 is where the shorts are making money. And a type 4 is where the stock is weak technically and no one is short. And so GE was a great example. When it fell apart a couple of years ago, no one was short it. So people kept selling the stock and there's no one covering, and it just kept going down and down and down. Is that a good summary for you?
Perfect.
Okay, great. So now let's go back to just looking at how we create a short intensity rank. So here's McCormick. Let's take a look at McCormick, and you can see what's really interesting is this is a short squeeze. Yeah, short interest is going up a bit, but the short ratio is really going up because not a lot of people are trading this right now. There's 2 ways that you can get a short squeeze. One is the absolute number of shares are going up. The other one is shares are going up, but also volume is decreasing. So then the short ratio rises. And you can see right now, the short ratio on McCormick is up at 5 days to cover. So it would take the shorts 5 days to cover their position. And you can see going back historically, we have to go all the way back into kind of here. So in 2020 was the last time that the short interest was this high. And so the way we build the short intensity level, which you can see here, is now 68%, which means it's got moderate short selling, but it does have a short ratio of 5. So it's going to take the shorts a week to cover out. It was funny. I saw yesterday Mark Cahotis had made a comment on like AMC, saying that AMC was like another big, short squeeze. If we go look at AMC, you can see that what's happening is, even though the short interest has stayed really, really high, the short ratio has come down to nothing because there's been so many shares that have been traded. So you want to determine the short intensity level by looking at where the short ratio is. Shorts could cover out of their position in a day on AMC now based on the volume. So a really big mistake is to say, oh, there's just a lot of shares short, or the share short as a percentage of float is really high. That's kind of irrelevant. What's really relevant is how long it takes shorts to cover. So I don't consider this stock to be a short squeeze anymore. In fact, it's basically like a long squeeze. It is a long squeeze, and it is a type 4 because the tech rank is at 10%, short intensity is at 17. And it takes less than a day for the shorts to cover out their position. Kind of a pretty interesting example.
Yeah, that's I think lost on some people that don't really understand how truly short interest works, and I think that's important.
And you can see
now, it will go up though when if this does start to, the short ratio will start to go up if people start to lose interest in this.
Yeah, well, look at this. This is GameStop, the opposite situation. Finally, the shorts gave up, and now the short ratio is at 0.57, and it's at 15% in terms of short intensity, and the tech ranks at 10%. So there's really no way that this thing would be considered to be a short squeeze anymore, and that's where some mistakes are made on stuff. So go ahead.
This will go down. This will go down in the new year.
So what's really interesting is we love the idea of, let me come over here and just do this. Each week we put out a scan that looks at our favorite ideas. So right now we put this screen out every single week. These are our favorite short squeeze ideas right now: Palo Alto, Avago, Estee Lauder, Signature Bank, KLAC, and PLD. So let's just take this has actually been a fun one because it's been on our list for a pretty good period of time. And you can just see the stock has just been climbing every week. So it's been an awesome name to own. And you can see they started shorting it back in here, and they haven't really added to it, but it's kind of stayed at this level. But the short ratio has gone up because volume has gone down a bit. And this thing, it's just been a great chart. We've had it in for, multiple weeks now. So this would be like just a consistent going up every week. And then there's examples of like Palo Alto, which has been basically a rip, and we're still playing that rip to the upside. Another kind of example, Estee Lauder also making a new high, right now. So we love to track fun short squeezes, and then we also do the opposite each week. We look at type 4s. So here are stocks that are all technically weak right now. This is good actually because we create this list over the weekend and put it out Monday morning. So we've now had Monday, Tuesday, and Wednesday's action, and none of the tech ranks have really changed that much on this. So let's take USB Bancorp as an example. You can see it's just kind of plugging away here. And if it were to break 55, that would be really problematic for the people that are long, because someone may give up and they start to sell and then no one's short, and it would drop down to 50 probably pretty quickly.
What about Crocs? I've had a couple of people ask me about Crocs because that was a flyer, and that one's now.
Yeah, they just bought someone too, and so it's struggling. I mean, you can see tech ranks at 10, short intensity is 32% in 2.82 days, so a little bit more. But I mean, we got a break. The reason I put this on, I like it here because it's struggling to hold like the 125 level, and that's basically where the 200-day moving average is. So if we get a break of the 200-day, bye as well.
Could you just someone asked if we could look at Peloton. I'm long a little Peloton for a bounce.
Now this does have short interest in it. You can see down here, but the tech rank is still really, really weak. So let's hit on a concept. So our viewpoint of short interest, the value add is typically over 1 to 3 months. A short squeeze will play out or a long squeeze play out. One other thing that we do, which Tom actually showed really effectively like a week ago, was Nike. And we'll come back to Peloton and look at that as well. But I'm going to go, and the other thing we do besides short interest is we do fun work on options. And so we do the same thing. We determine when put activity gets too high, these green dots, or when it gets too big of a run, the call activity gets too high right now. So a way I could think about, and so Tom identified like, hey, I need to get out of this short because the Erlanger option rank is really high right now. And we look at 4 things, and I'll show this in a second. I'll go back to the presentation. We look at open interest, premiums, money flow, and the total number of contracts that are traded. So if I wanted to buy Peloton, it potentially could be a short squeeze. Tech rank is still weak, but let's take a look at what's happening with the put activity. So really interesting. The puts have been high since kind of in here, but we haven't been able to trade above the DMA channel, which is a technical indicator that we equate to being like a bias indicator, i.e., do we want to be long or short? We need to see the price start to get through that channel. And you can see down here, it's basically been red below the channel or yellow in the channel since like mid-November. And if we went back to look at Nike, we would see that what happened with Nike is it turned green, which meant it got above the channel, and then boom, we got the rip to the upside. So that's
on Nike, Geoff, on Nike, yeah. which I liked. I used the Erlanger research combined with other indicators like DeMark and such. We had upside exhaustion signals in Nike at the highs. I noticed those red dots in the middle option rank there where there was heavy call buying. And so I shorted the stock. I covered it the day of earnings, ahead of earnings, because I started to notice, and I put out on the note, some more call buying, or excuse me, put buying. And that's been actually very, very solid. Those indicators have been very, very solid ahead of earnings, especially. I'm finding myself looking at the option rank more this year versus short interest because of the intense option activity that we've seen happening in overall in the entire market. Just because of the new entrance to the market as well. So that's very good. Now,
yeah. So Tom, let me stop you for a second. So I'm going to show a chart here, which is a really cool chart. Ignore all this other stuff in the middle for a second, and we'll come back to here. This shows our sectors when the average sector rank is above 70 on the options rank. So we're looking at all the stocks in the sector that have options, and then averaging out equally what the score is. And you can see at major lows. So right here is the S&P, and you can see as we kind of came into this low, we had a lot of excess put activity on a sector level. Most bottoms are identified with that. What's really interesting is this year, we've actually seen almost every low, we've seen it pop, 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 and now again. And look at last year, as we came into the end of the year, I mean, it flatlined after we had the February and the March event. As we got into the low off the pandemic, you can see the put activity was telling us this market's getting ready to bounce. This without a doubt, is probably the best single indicator I have ever seen for calling market bottoms. Like if you're still shorting when we got down to this level and the put activity was excessive, that you felt a lot of pain last year. And what's so interesting is how volatile this year has been. So Tom, an idea that I was talking with a client yesterday, and then I'll turn it back to you and you can kind of expound on it a little bit too, is has this year been a volatile year? And the sector option stuff rising on the put side tells us it has been. And what's interesting is if you look at the VIX, Phil's got this theory, he calls it the Camelot Theory, which is a VIX, when the VIX is below 20, the market's in the Camelot phase of how it performs. It does really well. And once it's above 20, then you want to be concerned. And 11 to 12 months this year, sometime during the month, the VIX has been above 20. The only month that we didn't have a VIX above 20 was in April, and you can see there the option stuff was not extreme on the put side. So really interesting that a lot of people are saying next year's going to be volatile. And I'm like, Well, this year was still pretty volatile too, from looking at this indicator.
Yeah, we just had a series of 3% drops that caused panic for a lot of people. The one thing I will remember back in March and April of 2020, with the pandemic raging and everything going nuts, we did a webinar and we showed that option rank across the board with every single stock was just massive put buying, and that was a really good tell for us to say, hey, this market's going to go higher, and it was a good tell. Now, give us a couple minutes on the recent activity of what's happening, what we saw on the last report.
Yeah, perfect. So let's do that. Let's just go. We're going to go over to back to here, and we're going to go to our latest. We do 2 updates on short interest. Both show some different things. So first of all, here's a key comment. This is the absolute number of shares short on the New York Stock Exchange and on NASDAQ. And what's interesting is since February of this year, short interest has been rising. Now NASDAQ has seen short interest up 18.46% since February, while New York really caught up the last couple of weeks. You can see the last period before this one up 4.31, up 1.89. You can see NASDAQ went up 27 basis points and 3.98%. So short interest is kind of pretty decent right now. The collection period, we love to look and see how the market performed. So the last collection period was from 11/26 through 12/13, and the S&P rose by 1.62. And you can see first it dropped and then it rose. And so the next period went through yesterday's close, and we're also going to see an increase. And it'll be interesting to see how much covering occurred. A really cool idea we look at is once we know how high or low the short selling is in a stock, we then can look at all the times the short selling has been high, and then we track it from short intensity being about 50% or above 80% to see how the short sellers did. What's interesting right now is if we look at our sectors, there are only 6 sectors where we have smart short selling right now. All these other sectors are driven by dumb short sellers. And it's interesting. We have a chart in our other short interest report, which I'll show in a second. But basically, a lot of the market peaks are led by a change in this. So we go from dumb short sellers to a lot more smart short sellers. And kind of a cool thing that is supportive of the market continuing to move higher right now is that. Another chart, which is a fun chart, is average short rank. So you can see since the beginning of this year, short selling has gone up. We're still not at a crazy level. We're at like roughly 37% now. What's really interesting is the tech rank is just absolutely horrible. Since February, it's just gotten lower and lower and lower. So we don't have as many stocks participating, and it's something that Tom's hit on really well this year, the idea that, the top 6 or 7 stocks in an S&P or the NASDAQ have driven the performance. And you can clearly see that's going on here, and why there's such a divergence in year-to-date returns on the Russell versus the S&P. So here we go. This kind of shows that average short rank, still a lot of sectors that have really low short interest. Nothing, if it was blue, that would mean above average, and we have nothing there right now. And we only have 4 sectors above 45%. Here's what we're talking about with the tech rank. Look at this. This is absolutely hideous. We only have 1 sector, semiconductors, that have an average tech rank above 50. Everything else is red, which means basically that it's below 45%. You can see there's 1 at 40, and everything else is really, really weak.
Yeah, and that chart, Geoff, looked like the NASDAQ composite percentage of stocks above the 50-day and even the 200-day moving average has been just dreadful. Yeah. So that's, we've really seen the mega caps do the majority of the lifting. And I do want to get to the mega caps and look at some of those, because I think it's really interesting that from what we've had in the past, we haven't seen very high short interest on. Yeah,
so let's go back to that. We'll go back to the chart room here and take a look at some of the mega cap names. And I'm going to click on short interest. We'll just make it a full page so we can see it really well. And then, so you want to just start hitting me with some names you want to look at?
Apple. And can you put the can you put it with the option rank as
Yeah,
well?
sure. Let's see. Oh, hang on. Figure this out. There we go. Okay.
Okay.
So there is some short selling on a relative basis for this stock, but it's still a low short ratio. And the option stuff is nowhere to be found. So I would like this as a short idea if all of a sudden we saw this come up. And a cool thing that we can do is we can track how good or how bad the short sellers are on a stock by stock basis. So that's kind of a
could you just blow up the lower left box, the option with the option rank? So this is really, if you look at where the call buying gets intense or the put buying, I mean, you can go back to 2020 right there. We had call buying going into the year. We had massive put buying at the lows, and then
over here.
you saw call buying, increase at the highs right before pullbacks, and
there you go.
I just think this is so good.
Oh, Apple, you can trade, like I was saying about the sector option ranks. You can trade Apple almost as well off of this. It's interesting. Apple, we've only had excess put call activity there since July. So really, we've just identified periods when it made sense to be a buyer, but we haven't. I mean, the options rank by itself hasn't called a peak in Apple yet at this point.
Yeah, makes sense. Okay, so let's go on to Amazon. Amazon, Microsoft, Google, Tesla, Nvidia. Those are ones that we want to look at.
Yeah, so Microsoft, I mean, tech rank is kind of blah now. It's been kind of stalling out, just tracking the S&P. Shorts are average. Nothing extreme on either the call or the put side right now. Let's see, you want to do Amazon. It had shorts. They're now back below average at 48%. Nothing going on either side. One thing that's also kind of cool to combine with short interest and options that we do, just to show this really quickly, seasonality. So what's the seasonality? This is typically Amazon seasonality, which basically is it only has one period of seasonal weakness historically. And what we do is we compare the oldest 7 years against the most recent 7 years. We look at 15 years of data. So after tomorrow, 2006 goes away, we'll have a full year of this, and then we'll start tracking again for next year. But Amazon does trade flat, and then it starts to trade up in March, and it has a run until any weakness. It's a pretty amazing chart because the cycle R is 0.92. One would be a perfect correlation, and this year so far the correlation is 0.63. So it's pretty strong as well. But kind of a nice thing to look at as well. And just a key point here on the market struggles. This is the worst seasonality into March. So there's, when you got the orange shading below, that's bad. This is a heat map showing day to day. So this is also, everyone knows about September, October, but the first quarter traditionally is a tough time period for the S&P. Also for the Qs kind of really in late February through March. There's the Russell, just for everyone can see seasonality.
Well, the on the Qs and the SPYs, the correlation's been very, very high. It was around 93.
85.
Yeah, but 93 this year, right?
Yeah, 93. It's amazing.
95 on the SPYs.
Yeah. So let's go back and look at a couple more stocks here. Adobe. Let's look at Facebook. Facebook actually has some shorts in it now, and it's got put activity. So when Facebook kind of came down to this low, and then you saw people starting to add to a short position and add put activity, there was no way you wanted to think about that as a short idea, and it's been working as a long. What's interesting though, the tech rank still hasn't improved. It's still at 20%. So the move hasn't been big enough to have the tech rank go a lot higher.
Right, I covered that one recently. That was a good short. Could you look at Adobe, because this is one that I recently shorted and covered, and that one I was really watching the high number of call activity, and we had DeMark exhaustion signals, and that worked out well.
So what's interesting here is at this peak, there were shorts in it. Kind of a cool thing that we can do. I'm going to go pull this up real quick just to show everyone. So we can track how well the shorts have done in Adobe. So hang on, I'm just going to go down here to find. Okay, so let's just pull up Adobe. So what this shows us is that the heavy short intensity grade is a 3. 1 means that the shorts get absolutely killed, and a 5 means the shorts are making money more than half the time. So there's been 15 trades where there's been heavy short selling in Adobe, and historically the shorts get squeezed 67% of the time, and the average amount that gets squeezed is 18.8%. And when the shorts make money, they make 8%. So if you decided to short this, know that like your odds of making money like aren't great, but if you're going to make money, you're probably going to make about 8% before the shorts kind of give up. And then here's the same thing with moderate short selling. When it's moderate, the shorts actually do a little better. They make roughly 10. And when the shorts get squeezed, the squeeze is 12.69%. Kind of a fun thing to look at.
Yeah, it's interesting. Okay, we've got a bunch of more to go. Can you look at Tesla?
Sure.
That's always something that gets my heart
I'm
racing.
gonna run out of time in about 10:40 because I got to go pick my kid up from swim practice. He's been in the pool since
no problem. Yeah,
he's been in the pool for an hour and a half. So
all right, speed round now. So
okay,
bang through these. We've got a few more.
Tesla looks good. Technically, not a lot of shorts, and the options are so it's an okay stock to be. If I was in it, I'd be in it. If I was short, I'd be looking to see if the tech rank can kind of fall apart, and then think about it as a short.
Right. Okay. Let's look at CCL, Carnival Cruise.
Hey Tom, I'll let you jump in. I like to have people that know our work kind of make a comment, and it shows like how easy it is to get up to speed on our work. So Tom, why don't you tackle this one?
Okay. Looks like the short ratio is a little higher. 2 days to cover. Right there on the top chart on right there. And then on the option rank, it's been a very steady amount of put buying, and there could be, that's partly why we could see the stock lift here with a squeeze here. Seasonality is a little better heading into December and January. I'm just quickly looking at that. And so the other thing is on that, it's a type 4. So there is the potential for a move, actually scoot that over a little bit more. It was a type 4. Maybe it still is.
Let's make it full. So
yep, it still is it's a type 3. So the shorts are winning.
Yeah, but look at this move from here all the way down. You can a nice thing you can do in chart room is I click the crosshair, I click the data window, I click the anchor, and I click the other anchor, and we can just track and say like, okay, how did this do in this time period as a type 4? And the answer is it made 17.65% on a close basis. So it's a great way to just quickly track and kind of see, besides what I was showing before, for looking how things did.
Okay, another one, Hood, which is my middle name, by the way.
Yeah, this isn't going to be as useful because we don't have as much history on it.
That's what I thought.
But so here's the deal. We don't really start tracking until 6 months, and you can see we finally just started to get a tech rank on it, and like we have a short ratio, but we don't have a short intensity because next period we'll finally have a short intensity after 6 months of data. We'll have the short intensity on it. But a lot of
I was actually looking at this, Geoff, as I was short the stock, and I had a ton of put options going into the share unlock period, and I was actually looking at it as a short squeeze type of thing because it's gotten a little overdone. Okay, let's keep going. Let's look at Etsy, ETSY.
So it's weak technically. It's got some shorts in it. It's got the puts in it. If I had a long bias for it, I'd think about it as a potential buy idea down here for a put squeeze play for a bounce. And then to Tom's point, let's just click on the seasonality. We're looking at seasonality, and seasonality is horrible. So that to me would be like, okay, I'm aware that the seasonals could be really bad, and I need to kind of watch it a little more.
Let's look at ARK, ARKK, which I'm short still.
So this is kind of a key point. We don't do a tech rank on ETFs because most ETFs are too highly correlated to the S&P. So we have other things that we like to look at, like as an example over here, trend direction is our trend indicator. Above good, below bad, green uptrend, red pullback, red downtrend, green rally. So it's trying to potentially rally right now, but it's a struggle, and there are people short it, but not a high short intensity level.
Right. The option rank right down there below, there was a lot of there were call buying that people, you could see the red dots right at the high, that recent high at 125, and then people just got run over. And then there at the bottom there was some put buying. Now it's more neutral. You're probably going to see call buying show up in this thing in the next couple of weeks.
Hey, so Tom, let me show this real quick. This is how we like to look at bias. And what I want to do is I'm going to put a DMA channel in of ARK, and I'm going to do two things. I'm going to do a weekly. So basically, when you're below this band, that's a negative. So it's done a good job of getting you on the short end, a little bit on the long side when it did work. The other thing is to do a monthly DMA channel, and I want to show the S&P because I think this is really a cool thing for people to see. Monthly is not going to be as great on ARK. We're going to, oh, hang on a second. I want to do this. I want to go to edit study, monthly, and I want to change it to bottom. So there we go. So that's you can see how the monthly and the weekly are kind of all together right now. But watch this. When we do this, let's do the S&P monthly, and we're going to put in a add study, just a DMA oscillator at the bottom, so you can see, and we're going to do it monthly. So look at this. This is really interesting to see. This is the last 20 years. And the whole idea is when the DMA channel goes red, i.e. below this orange band here, that's when you want to be out of stuff. So long period here, long period in here, 07 into 09, then kind of shorter periods since. Even this period was very short. We haven't had like this type of event or this type of event in a pretty long time now. And this does tend to cluster, by the way. So you can see we stayed above the DMA channel 1, 2, 3 in a period, then we kind of broke it. And now we're kind of 1.5 years in. And if we go further back, you can see this goes back to the beginning of when we were using the DMA channel. 97 hit it very shortly. Most of this period was positive, and then boom. So if you look at historicals of the last 20 years, we're kind of, there could be some risk to it.
Okay, Geoff, if it's possible, if you've got to go, I can take over and launch mine, and I'll just go over some.
Yeah, I can stay another just a couple minutes. We can do
okay. So let's look at. So there's a lot of ETFs in here. Look at Zoom ZM, please.
Shorts are now in it, and they're making money.
Yeah.
And it's got to put, but here's what's interesting about this on Zoom. Understand that just because there's high puts, that's not enough. You need to get the DMA channel kind of working with you and moving above, like it did in that period right in there. But most of these other periods since August, we really haven't had the put squeeze play out. So not quite as good on this one.
Correct. Okay. Let's look at SD, Sam David.
Okay, nothing great. You know, excess put activity, so a little bit of a put squeeze maybe down here. Tech rank, short intensity. I'll show you a name I like right now as a potential bounce play. So this is, you know, not being a Mo name on the long side. I love this name right now. It's probably my favorite energy name. It was Phillips 66 because tech rank is still kind of a struggle. It's been struggling for a while, but look at the shorts are adding to it, and it's got a put squeeze going on. So to me, this is a really easy stock to get long because my stop is if it breaks 70 and, maybe we come up at least to test the 200 day, if not the 65 day right there, and then maybe go to there. This is where I think the overlap of Tom's stuff with our stuff is really good. So if you got, some of your, buy signals that you get onto Mark or some of the other stuff you've created, and then you see this, it's kind of like, okay, it's a trifecta, and I want to get long.
Right. Could you look at Baba, please?
Awful.
Yeah.
It's horrible. I mean, most of China stuff looks like this.
But this is now a type 4, so there's a potential squeeze. There's a lot of put activity.
Yeah. So before we kind of end, I mean, we can pick up maybe next week, do just like a chart thing too, where if people want to look at more stocks, Tom. One thing I want to mention is, so I showed earlier how we track type 1s and 4s we like. I also track the full universe. So here's a really interesting pattern that I figured out a couple of years ago. When we get multiple weeks in a row where the type 4s lose money, you typically get a bounce that occurs. And it happens either after 3 weeks in a row, 4 weeks, 5 weeks. And this is from 2009. And roughly 15% of the weeks you've had that type of setup occurring. And we just had it on 12/3. And so far it's made, the type 4s have actually outperformed, which when you think about it, it actually makes a lot of sense. A lot of type 4s are actually good companies, so people stay away from shorting. So then after the market's had a sell-off and you get ready for a bounce, boom, you do. And in the 4 weeks now, since we've been in that buy situation, the type 4s are up almost 7%. So if you're a short seller and you're shorting type 4s, you got to be really careful about the type of stock that you're shorting. You don't want to be shorting something that's come down and kind of built a base and is still type 4. You want to still find the stuff that's more toppy, that hasn't broken, like we've had with US Bank Corp. That to me is like, it's not at an absolute low like some of this other stuff has been. So
so Geoff, I know you got to run.
Yep.
Let's just stop here.
Okay.
There are some that we didn't get to. I'm sorry about that. You can just send me an email at info@hedgefundtelemetry.com, and I will do my best to send you what I can today. So just send me. Don't go crazy. My time is I'm very busy today. So just send me what you can. And thank you, Geoff, and everyone for joining us. This will be on our YouTube channel later today, and we'll be doing short interest updates every 2 weeks going forward.